Hello, everyone, and welcome back to the new Blueprint Strategy course. First of all, congratulations on completing Module 1, Strategy 101. Strategy 101 was designed to build a strong theoretical or conceptual understanding of the various powerful strategies you now have access to. So by now, you should conceptually understand the difference between technicals versus fundamentals, finite versus infinite markets. Set and forget and get alive should also be familiar. Trading terminology to you. You should have a basic understanding of charts. You should have basic understanding of candles, order flow, willing buyers versus willing sellers, supply versus demand, filled orders versus unfilled orders, and that every price chart consists of filled orders and unfilled orders. What we discovered is that what we see are candles in the form of filled orders. So candles represent transactions that have already taken place. Unfilled orders, on the other hand, they are invisible to us. Yet those are the orders that move future price. So our goal is to identify the areas where we're likely to find institutional unfilled orders, and we need to find and identify the areas in the price chart where institutions are willing buyers and willing sellers, so that we can align our trades with them. And this is what Module 2 will be all about. So with that out of the way, welcome to Module 2, Supply and Demand and Fundamentals for Market Setups. Module 2 is divided into 3 lessons, and each lesson will likely consist of multiple parts, that is, depending on how much time you really need for practical applications. Until today, we spent a lot of time in PowerPoint slides and we spent very little time in the charts. But from today, I want to change this. I want to switch this up. I want to spend very little time in PowerPoint slides, and instead I want to spend a lot of time, as much time as possible, in the price charts. I believe that guided interactive screen time and practical application and practice in general is the most value that I can bring to you. What I can see is that members generally that have access to a mentor are likely to show market success much faster. That is just the data that I have access to. And that makes a lot of sense as well, because as a beginner especially, you cannot audit your own belief system. You cannot audit what you're doing on your own. You cannot audit whether you're applying something the correct way or the incorrect way. I will take you by the hand, right? And well, for those of you that are following live, I'll make sure that each step of the way you understand the theory, and you don't just understand the theory, but you also know how to translate the theories into practice. Now, I can only do that if you know how to use TradeStation as well. So what I also need to do, I also need to show you how to use and how to best use TradeStation. And here I'm also going with the same stair-stepping approach. So as your trading know-how and skill advances, so will your TradeStation skill. Okay. So now you may be asking, well, what is this module all about? Simple. This module is all about the big picture of trading. In one sentence, after this module, you will know how to consistently predict major rallies and declines in the market using fundamentals, and where in terms of price you want to be a buyer or seller using supply and demand. Starting with lesson 1, supply and demand zoning. In this lesson, I will show you how to identify supply and demand imbalances, supply and demand zones. There are 4 types of formations, 2 supply and 2 demand formations. So I'll show you what those formations look like visually, and how to identify them scientifically or objectively by categorizing candles into 3 different categories. I'll also give you a mechanic process on how to identify these formations or imbalances, and also how we then wrap those lines around the imbalances to draw supply and demand zones into the chart to figure out where the institutional footprints are, to figure out where the institutional willing buyers and willing sellers are most likely to be within our beloved price charts. All right, so let's jump straight into the demand formations. As I said, there'll be 4 formations in general. There'll be 2 demand formations and there'll be 2 supply formations. The first demand formation is a so-called drop-based rally, or in short, DBR. And it looks like visually, just like the name suggests, what you can see is a drop in price in the form of red candles. Then you see price basing in the form of any color of the candles. And then what you see is from a basing state or from a balanced state, you see that price is rallying higher in the form of green candles. What we'll be able to find within the base, where price was balanced before, is the origin of imbalance. Now, balance leads to an imbalance as we see price moving from basing candles to a rallying state. Okay. And where you see the yellow box, this is the demand zone or the origin of imbalance, because that's where the green candles start, right? So if you're looking for demand, we're looking for willing buyers, and hence what we need to figure out is where had the willing buyers been acting previously. And therefore, most important for us looking at this formation is the base as well as the rally. What's less important is the drop prior to price basing. Now, another formation, another demand formation is what we call rally-based rally, or in short, RBR. As the name suggests, a rally-based rally is visually seen as a rally in the chart and then price basing or price being balanced. And from a balanced state, we see price continues to rally. So price goes from balance to imbalance. And where that happens, where price goes from balance to imbalance, that is the demand zone or the origin of imbalance. That's the origin of imbalance because that is where the relationship between the willing sellers and the willing buyers has shifted into one party being in control. And that is the willing buyers being in control, the willing sellers turning zero, and therefore we see a continued rally. Now, where that shift takes place from balance to imbalance is where the origin of imbalance is, and hence that is where the demand zone is. The most important parts for us here again is the base and especially the rally out. Okay. What's less important for us is the rally into the zone. And you can see what the demand zones have in common. They have in common the base followed by a large rally out. Followed by a large rally out. That is the important part. Whatever happens before that, either a rally into the base or a drop into the base, that doesn't matter. That just changes the name of the demand zone. One is a drop-based rally with this visually looking like a U shape, and one just being a rally, base, rally, with a rally prior to the base. So here again, most important, we'll be looking for green candles. Now our supply formations, they will just look very similar to our demand formations, but they're just the inverted. So, and before you had a U shape, here you have an inverted U shape. So the first supply zone is a rally-based drop. You can see price rallying, then you can see price being balanced or basing, and from the balanced state, we see price turning lower, and from balance to imbalance, where's the origin of imbalance, right where those red candles start, and therefore that's where the willing buyers in this case turned zero and the willing sellers took over. They're in control. They moved price lower, and therefore where you see the yellow box from base to the drop, that is the origin of imbalance, or that's the supply zone. Now, important here is again the base as well as the decline. That will be the most important for us. Next, we have a drop-based drop, and the drop-based drop is also, as the name suggests, it's a drop, and it's a base in price, and then it's a continued drop. What's most important for us here again is the base of price and then the decline. Whatever happens before that, either a decline or a rally, that really doesn't matter too much. It's just going to be a difference between, is this a rally-based drop or is this a drop-based drop? In terms of the trading terminology, what really matters is that if we're looking for supply, we're looking and we're trying to identify where the willing sellers really took over. And most of the time, we can see that if we look for a base followed by a large decline in price, a base followed by a large decline in price. Now, what do we do when we see those kinds of demand or supply zones? Well, one may argue that, well, what we're going to do is, if you're here, if price comes down, and then if you see price basing, what you're going to do is you're going to anticipate that this move is going to take place. Now, this is very difficult to do, right? And you may be able to do that if you apply the right fundamental set of tools. You may be able to predict the rally before it happens. You may be able to predict a demand zone to be formed before it's being formed. However, that's a lot more difficult. What's a lot easier is to let demand be formed, and after demand is formed, we're going to trade the pullback into demand, because this is where we would expect price to rise again from this area of price, because here we have more willing buyers than willing sellers, demand excess, economics 101, more willing buyers than willing sellers, and therefore we would expect price to rally. So rather than predicting this move to happen, which is also something that is possible, but it's more difficult, we need fundamentals to do that. What we're going to do at first is we're going to wait for demand to be formed, and then the plan is we're going to buy the pullback into demand. Now, where most people go wrong is when they just look at price itself without fundamentals, is they look at price and they look at price only, and they're trying to do that right here where they're predicting price to rally. They're predicting that U shape to be formed before it's formed. Now, if we just look at price, that is very difficult to do, as we don't have fundamentals that may tell us, whether we can expect a large rally or a large decline. So by just looking at price, we have no way of knowing that there is going to be a rally out of this origin, out of this basing state. We have no way of knowing that there's going to be a rally. But after the fact that there is a rally, we can say, well, now there's a demand zone, there's an origin of imbalance. If price comes back into this origin of imbalance, what we want to do is we want to buy. What do we do if we see a rally-based rally? Well, it's the same thing. We're not going to anticipate a rally-based rally to be formed. What we're going to do is, once we wrap our two lines around the base, around the origin of imbalance, we're going to move and extend those lines to the right. And when price comes back into the zone, we would expect price to rise again from this area, as there's more willing buyers than willing sellers. And therefore, we would place our trade parameters around the demand zone, we buy to enter, and ride the wave to the upside. So again, here we will not anticipate that price is going to rally out of a basing state. What we're going to do is we're going to let price do its thing. We're going to let institutions show us the way. And once we see their footprints within the charts in form of unfilled orders, potentially, then we'll place our orders and we'll patiently wait for price to come back and then buy the demand zone. What about supply? Are we going to do anything differently when we see supply? Not really. The only difference is that rather than buying, we would be selling, right? So when we see supply, we want to be sellers. However, we're not going to anticipate this move to the downside. Rather, once that inverted U is being formed, we're going to wait for price to come back. And then that's where our action to sell comes in, as we would expect price to decline from this area. The same would apply for the drop-based drop. Once we see that a drop-based drop is being formed, once we see that price goes from a balanced state to an imbalanced state, we would then wrap our two lines around the base. We would place our set parameters around this origin of imbalance, around this supply zone. And as price comes back, we would be a seller up here within the zone, as we would expect price to decline from this area. So this is the formation summary. These are the formations that we have. We have a drop-based rally, DBR, and we have a rally-based rally, RBR. Those are demand zones, one being a U-shape, one being a rally-based rally. And what's really important for us when it comes to the demand zones is what both of them have in common is they have a base and they have a large rally out. This one as well, we have a base and we have a large rally out. And what we're going to do is we're going to buy the pullback into demand. We're going to buy the pullback into demand, as we would then expect price to rally from those areas. Likewise, for the rally-based drop, RBD, or the drop-based drop, DBD, those are both supply zones. So we have the inverted U-shape as well as a drop-based drop. What's most important to us is the base and the decline out of the base. Again, balanced state to an imbalanced state. Here again, what's most important to us is the base to the decline. And once we can see that, what's our plan? Well, we're going to wait for price to come back. We have our set parameters ready. And once price is coming back into the supply zone, we'll then trigger our sells, as we would then expect price to go lower. And the same would apply here. We would then sell the pullback, as we would then expect price to go lower. Now, I'll do a lot of practical applications on those later on. So don't worry if you're not following 100% as of now. Within those formations that I just showed you, there are going to be different candles that make up those different parts of those formations. And as I've shown you in a previous lesson, there are thousands and hundreds of different candles. There's going to be small candles. There's going to be large candles. There's going to be candles that have crazy long wicks, and there's going to be candles that have no wicks. And for us to make sense of those candles, what we can do is we can categorize all of those hundreds of different types of candles into three different categories, three important different categories of candle types. So we'll have indecisive candles, and we'll have decisive and explosive candles. Both of these types implicate a completely different scenario of what's happening in terms of what those candles may mean for us and why we want certain candles to be part of certain parts of the formation. As we know, candles, they represent transactions that already have taken place. So they represent accumulation of orders. And what you can see from the left to right, if we start right here, you can see candles that have a small body and that have relatively large wicks. Now, when we categorize our candles, what we will do is we will look at the relationship between the range and the body of our candles. Okay, so we have the entire range of our candles. Remember, that's from the low end wick to the top end wick, and we'll have the size of the body of those candles. And if we take the relationship of those two, and the body is smaller than 50% of the entire range, then what we can assume is that these are indecisive candles. Now, indecisive candles would imply that there is a balance between the willing sellers and the willing buyers, right? It would indicate that there is a balance between supply and demand, and orders are being accumulated at the moment. There's a balanced state of price at the moment. Neither the buyers nor the sellers are in control because the market is not really going anywhere. Sure, there are long wicks, there may be long wicks, but at the end of the day, if you look at the close versus the open, they're very, very close to one another. And so the scientific rule here is, again, the body should be smaller or equal to 50% of the entire range. The visual cue here, however, is the close versus the open should be close to one another, okay, visually speaking. And that is, and we'll look at that later, that is because you may have very small wicks, right? You may have no wicks at all. So the body to entire range ratio will be bigger than 50%, but the candles may be very small in context to other surrounding candles, which then implies still that is still some indecisiveness going on in the market. So you have a scientific rule now, and you have a visual cue rule. As we move further to the right, you can see that now all of a sudden, though the candles overall are the same size, the bodies are bigger, right? And now as the body becomes bigger than 50% of the entire range of that candle, then we can say, well, that is a decisive candle. That is a decisive candle because the close and the open, they're far apart from another, meaning that the willing buyers or the willing sellers pushed price quite a distance. And then we have what we call explosive candles. And explosive candles have the same properties than the decisive candles, just more extremely. And we can define them as the body being bigger than 70% of the entire range, as well as, okay, and that's an additional rule here, as well as the candle itself needs to be abnormally bigger than the previous or surrounding candles. what the decisive candles and explosive candles have in common versus the indecisive candles is that they imply an imbalance. They imply institutional activity. Explosive candles imply clear institutional activity. So the larger the candles, we spoke about this in one of the prior lessons, we could see these really large candles within our price chart. And what it means if you spot a large candle is you're basically spotting institutional activity. And the larger and the bigger and the clearer, more visually clear the candle is, the more does it imply that there may be institutional activity. So what you can already assume is that when we go back to our formations and we said that for the supply, the decline is most important, right? So there's a base, a balance state, and then there's a decline. And here as well, there's a base, a balance state, and there's a decline. And then here there's a base, a balance state, and then there's a rally. And then here there's a base, a balance state, and there's a rally. So you can already understand that, hey, the candles that we're looking at, that we want each of these parts of the formations to consist of, well, for the green part on demand here and for the red part on supply here, we want to see imbalance. We want to see institutional activity, and the better the institutional activity, well, the greater for the chances of there being unfilled orders. And so what we ideally want is, of course, you can already assume that now, is we want explosive candles to be part of this specific formation. Now, as it comes to the base, right, the base is the other thing that's important for us. We already know, well, the base, it should be maybe consisting of indecisive candles, right? They show a balance, and then we go from balance to imbalance. So let's make a little bit of a test here, if you guys understand. And what you can see is basically a candle right here. And you guys just need to show with your annotate tools whether the candle that you're seeing right now is indecisive, decisive, or explosive. Yes, this one is explosive, of course. Even though we would have to say it could also be decisive or indecisive, depending on the surrounding candles, which we don't see as of now, right? But assuming this is also abnormally bigger than the surrounding candles, then it would be for sure explosive. What about this one? Indecisive. All right. Correct. What about this one? Decisive. Yes, I would agree with that. What about this one? Let's fire them out. First come first. Indecisive. Yes. What about this one? Dennis, decisive. Yes. Continue. Just a couple more. What about this one? Indecisive again. Yes. What about this one? For sure not indecisive. Could be decisive. Could it be explosive? Decisive or explosive?